Good morning out there, guys, and welcome to the Camp Financial Stock Market Update. Today is February the 10th. So let's jump in real quick to what's going on in the broader market in the last week. So some interesting things. We'll look at the S&P 500 heat map here, kind of go over, different sectors, who's performing well in certain sectors, who's not, and maybe discuss a little bit why. Also, I want to go into Sears Holding up 50% this morning before the market opens, on some restructuring plans that they're going to implement. Another one, earnings out last night. Big one to note is Activision Blizzard. So I want to take a look real quick. So if you look at Blizzard in the last week, they're down 1.83%, but that doesn't include the 10% gain that they've got this morning so far. So they're off and running, and a blowout quarter. I think I saw the highest revenue quarter that they've ever had. So very interesting stuff there. Okay, so now let's jump in. Let's take a look at the broader markets. We'll look for some bright spots. We got Allergan, generic drug manufacturer, up 7% in the last week. Let's take a look. I also seen Gilead this morning has been popular on the CNBC. So let's take a look at Gilead and see what it's done. I guess it's up about 0.5% this morning. Nothing big, but that's coming on the back of a week where they're down almost 10%. Versus some of the other players, probably the number 2 player in the sector in biotech, Amgen, up almost 5%, and Vertex Pharmaceuticals is also one of the larger ones in there, and it's up about 2.94%. So Gilead is kind of, they're the main one, and then they're the laggard. So interesting. That's an interesting thing to consider for biotechs. So are biotechs starting to turn around, or are we getting more selective on which biotech companies we're interested in buying into? Let's take a look at the independent oil and gas in the last week. You got Conoco Phillips. We are holders of Conoco Phillips. It's up 2.3%. Pioneer Energy up 4.5%. You've got Hess down 3, Apache down 3.5, Marathon down 3.78. The big one down here, Cabot Oil and Gas, up 13% in the last week. I haven't looked at their report, but I'm sure that they must have had decent earnings come out over the last quarter. Let's take a look over at the oil and gas refiners. You got pretty much everyone's up except for Phillips. Phillips is down 2.25%. You got Valero up 3.5%, Marathon Petroleum 4.25%, and Tesoro up 6.1%. The major oils basically flat. Chevron's up just 0.04%. ExxonMobil's down 1% over the last week. Emerson Electric, big, up 6.5% in the industrial electrical equipment sector. GE down about 0.3%. We do own GE. It's pretty much, we've held GE now for a little over a year and a half. I think is about the number. It's pretty much been flat. We've just been taking the dividend in and reinvesting the dividend. If GE does finally take off from here. The good thing is we're slowly building a position in the stock, adding, every time we get the dividend, adding that additional percentage back into our shares, so that if the stock does run from here, we're poised to see some pretty good gains off of that. Pretty much industrial, or the diversified machineries sector, has been pretty strong over the last week. I only see one that's down. Xylem is down about 2.5%. Everything else is either flat or up, up as high as 5%. For Flowserve, we've got 4.09 for Amatec. So that's been a strong performer in the last week. Apple, if you are interested, I did a write-up on Apple this week on my website. It is www.getinshapehq.com. We're probably going to change that web page at some point in time. May keep it and split it out. It was originally designed to focus on fitness, something I'm very interested in, something I like to do. I like to work out, I like to run, I like to lift weights. So it was originally designed for that, and then I just needed an outlet to write about stocks. So I decided, well, I've already got this page, let's just go ahead and start putting that out there. Maybe we'll build a following that way. So it's got a mix. You can search right on the left hand side of the home page, and it'll tell you, if you click on investing, you're going to get just the articles that are written that are based on finance or investing. So I just wrote about Apple. My target on Apple's, I don't have it in front of me. Let me take a look, see if I can pull it up. I believe I said $143 is roughly where I expect Apple to be in the next year. So with it at $132, I'm just not really interested in buying right now. I mean, I guess if I could get in probably around 125. I think if they sell, okay, my target's 148. So if they would sell off and come down to around $125, then I might be interested in buying. So another way to play that, obviously, if you're willing to get in at 125, is to sell some $125, sell a put at $125. That'll get you in 100 shares at $125. And if it doesn't drop to $125, you collect the premium for selling that option. So let's take a look right now at Apple and see what the options are priced at. See if we can get this pulled up quickly here. While we're doing that, we'll go ahead and take a look through the rest of the S&P 500. So Cognizant up 12.25%, strong week. We've got O'Reilly Auto Parts up 7%. Some of the bigger companies, Fox, 21st Century Fox down 4.25%. But you do have Viacom in that same sector up 5.5%. And over the last week, Verizon and AT&T have kind of found their baseline, and I definitely like both of those for their dividends right now at the price they're selling at. Everything I'm seeing looks like they're strong financially, that they're not going to have any issues going forward. And then the other thing to look at is the financials again, with the Dodd-Frank piece being not repealed yet, but obviously uh, something that our government's looking at. Um, it's gonna be a boon for the financials. I mean, if they can start going back to prop trading out of their own uh, balance sheet, you know, they're the big financials for a reason, because they do know what they're doing. So for the most part, obviously they missed on the housing boom bust cycle, but for the most part they know what they're doing, and they're going to make pretty good money over a longer period of time. Like I said, they missed that one, but which would have caused quite a few of them to go bankrupt, but bailout saved them, and so they don't have to worry. They didn't have to worry about that. Let's see if we got Apple pulled up here. Okay, so let's look at the Apple options. So when well, maybe we're gonna look at the Apple options. If we can get this page to load here. There we go. So when I'm buying options, selling options, I like to look at main expiration dates. So with Apple, I mean, you're looking at probably, I wouldn't want to do anything with the April options. I'd probably look out to June. So let's look at the June 2007, June 16th, 2017 options. Let's see what we've got here. And I'm gonna look at the put options at $125. Let's see. So the last price on $125 on the $125 option for Apple for June was $2.96. So essentially, you could sell $125 option for roughly $3. That's going to get you into the stock basically at 122 if the stock would drop to that price. I like that option. I also like the 130 for June. It's trading at $4.69. That gets us in right there at that $125.30 figure that we're interested in buying in. The other side, if it doesn't go down, if the stock stays above $130, you collect $470. You collect that $469 or $4.69 times 100 shares. So you would collect that, and then you could look at, obviously at that point in time, numbers are going to change, but then you could take a look at November, January options. Let's take a look at next January's just to see. Obviously, these are going to have significantly higher prices because they've got considerably more time involved in them. But so the $125 option for January right now is trading at $8.20. The 130 is trading at $10.30. Obviously, again, that's going to decay if the stock stays where it's at. That price is going to decay. If stock price comes down, that price is going to go up on the put option. If the stock price goes up, you're going to see that price come down on the option. So I like I said, I like the June. Probably I personally like the $125 option because that gets us in below our price that we're willing to pay up to. That's $125.23. That puts us in a position to take advantage of the stock decline. If it would drop down there, we get in at 122, and it puts us in a position to capture possibly a $26 upside on the stock. So that's it, guys. Take care, and we will see you next time.